This week's going to be a very important week for the markets and the economy because on Friday we have the Federal Reserve's preferred inflation measure, the PCE, Personal Consumption Expenditures Index, for August. That's coming out, and that'll be crucial in terms of how many rate cuts we're going to get for the end of this year. That combined with Federal Reserve governors speaking publicly to the media about their thoughts on the Federal Reserve's latest actions, the Federal Reserve's 50 basis point cut. So far, we have Fed Governor Chris Waller. We have Austin Goolsbee, who's very dovish, saying that there's a case for a lot of cuts to come in the next year and a half. And then even Neel Kashkari, who was kind of hawkish over the past couple years, saying that there was a strong case and need for a 50 basis point cut because the Fed is looking at the labor market side of the equation. And the fact that Neel Kashkari, who was recently hawkish, saying that is pretty encouraging. Look, he's not going as far as Goolsbee saying that many cuts are coming in the next year and a half, but he is saying that the Fed is watching the labor market pretty closely and looking at that a little bit more on their dual side of the mandate. They're focusing more on the labor market. We also have the FedEx earnings came out the other day. Revenue and earnings per share were weak, and weak guidance. The stock was down 14%. So, and FedEx is often used as a barometer of the economy. And if there's less demand on goods, is this something we have to worry about? It's possible, but I think the Federal Reserve is being proactive on some signs of a slowing economy, and especially with some of the labor market slowdown and with the unemployment rate ticking up. So I think they're being proactive in cutting rates into a slow economy. I think they'll produce a soft landing like 1995, in my opinion. Earnings per share growth is still very good. We have tech earnings still very good. I think there's a lot of tailwind still in this economy and market, especially with all the spend in tech and AI. I also wanted to talk about AI and its energy needs. We have Constellation Energy talking about restarting their nuclear plant in 3 Mile Island in order to power AI at Microsoft data centers. This is important because AI requires a lot of energy demand in order to power its data centers. The EV revolution also requires a lot of electricity as well as Bitcoin mining. And nuclear energy gives us abundant energy. So this is important and it's needed for AI. There's so much electricity needed in order to power all these data centers that we have to embrace nuclear. So I think this is a good sign. We also have some good news with Bitcoin. The SEC approved options trading on the Bitcoin ETFs. This will allow more institutional money to flow into the space. The downside of that is that it might actually decrease some volatility because if institutional money is playing calls and puts and there's more money involved with that, especially from institutions. I don't think Bitcoin will be actually as volatile in the long run. The price appreciation won't be like it was in prior cycles. But in a way, I think that's some good news. In a way, I think that it shows that Bitcoin is maturing as an asset class. And it gives investors more of an opportunity for exposure to place these options. So I think that's some good news over there for Bitcoin. Look, Bitcoin's been trading sideways for 5 months since the halving event. And I think Bitcoin's a coiled spring right now because of global liquidity is starting to surge, especially with rate cuts and the money printer going on, with more money flowing in the economy. And Bitcoin usually does well historically in that kind of environment. So I'm pretty optimistic right now.